So now that you know all individual parts of this strategy, it is now time to assemble a trade. The first thing we always look at is trend structure. We go into the market in the morning, for example, and the first thing we want to notice is that a trend structure is established or a consolidation has been broken. As we are trend continuation traders, we always want to wait for a first move out of a consolidation, then we want to get in on the second leg. This is the optimum situation. What do we see here? We had this massive level here built up during the whole New York session the day before that. Then in the morning of the Tokyo session, we broke above it. What happened then is that we pulled back into this level. So the direction of the market has been dictated. If we zoom out a little bit, you can see that on the M15 we actually made a head and shoulder like structure. This gives us additional conviction to move with this trend. And what else happened is that we broke the neckline, or you can draw it like this. We broke a lot of structure here, and at the same time we made this reversal structure on the M15, the head and shoulders. So what kind of pullback is that? That's the next thing we look for. What kind of pullback do we have on our hands? Well, this to me is definitely a flag. So you have these. You copy this to the downside. This is quite symmetrical. What else happened? We pulled back. The angle of the flag is good. When we finally hit this level, we made this double bottom here. These two bars, they closed within a half a pip. So this is a double bottom to me. If you go to the 1 minute chart, it will become more obvious, but we're not doing that for now. What else happened? The stochastic oscillator is in oversold mode right when we hit that level. And then we get this really nice rounded bottom and this strong impulse candle here. So where did it close? It closed above our trend line. So this flag structure has now officially been broken. Our stochastic is still perfectly lined up. We're coming out with a symmetrical stochastic. We are not even above the 50 level yet, and our RSI at the same time is closing above the 55 level. Now let's check our risk. We have 34 pips to the next pivot where we can potentially take profit, and to the downside 15 pips, 3 pips below the last low. This is our stop. So a little bit better than 2 to 1 on this trade. Next we check the round numbers. Where are they? Here is one, 122.50. Turns out this whole resistance level was a round number, 122.50. So we bounce from it, giving us additional conviction, and there is nothing in our way for the next 50 pips up until here, 123. Next we check the M15 chart for our stochastic. On the M15, what is it doing? Just turned, coming out of oversold. Perfect. If the M15 stochastic and the M5 stochastic look the same, if they are basically copies of each other, those are incredible high probability trades. What else do we have? As I said, RSI is closing above 55. The next candle after our trigger candle opens clearly off our moving average. So you can see, never touched it. So this is our entry candle with our stop 3 pips below this low, and our first level of interest would be up here. We are making this swing here. It could be that price will come down again to make another head and shoulder structure here. We are protected by this incredibly strong level. I don't sweat anything when something like this happens. Could also be that we retest this trend line, for example. Everything is possible, but we are protected by this level. So if price decides to come back down here and take us out, I'm perfectly fine with that. This is a high probability trade, as high a probability as you can get actually with this strategy. And then we make this swing. Now is the time to move my stop behind the swing, and we are locking in a little bit of profit. Risk is now eliminated, taken off the table for this trade, and it quickly hits our pivot up here. Then we move this to the middle, and then we get a reaction to this pivot. Finally we break through, and then we move our stop behind this pivot, 3 pips behind this pivot, because sometimes they get retested, and then we get taken out. So how much did we make? We made 30 pips, maximum profit potential 53 pips. And if we mark this level here, zoom out a little bit, it's pretty obvious where price stopped. Here, this is where we retracted. So you could also take profit up here if you choose to do so. I like to see, like, if I get a super setup like this one, I like to ride it out as long as I can. This one didn't work, but most of the time these levels break after such a setup, which it did eventually. This is how we assemble a trade, basically. And according to our risk management, we don't have to worry about the position size here. It all depends on your bankroll, not on the size of your stop. Never take a stop larger than 30 pips. So let's take a look at this one. This happened on the GBP USD during the Asian session, which is usually not something I want to trade during the Asian session. However, if I see something really juicy, like a really cheap entry with a possibly huge reward and the setup looks nice, then I will get in. Even during the Asian session, these sometimes can make huge moves, especially if there is a fundamental backdrop. And of course this has to be in accordance with the overall trend. We are obviously in an uptrend here. We made this drive up. We obviously broke out of this, whatever this was, and we came back down. We retested it. We made a kind of head and shoulders once more. Right now we are here. We have again the head and shoulders. We have a broken structure to the left. We have this drive, this impulse. So this is basically our flag. We broke this trend line. We can also draw it like this. Doesn't really matter. Important is that we broke something in the direction of our trade. You can also draw it like this if you want. The stochastic is telling us I'm looking perfect. The RSI is looking perfect. Overall structure is looking perfect. We closed exactly on the trend line. Often if we close on the trend line with the trend, this means that the break is imminent. The next candle opens clearly of our moving average. Let's take a look at the round numbers. We bounced exactly from a round number here, and the next pivot is way up here, and 15 stochastic. We made a cross to the top just in our signal candle. So this is obviously a AAA trade with a really cheap stop of 14 pips for a potential of 100 pips. We put our stop, as always, 3 pips below. Where was my favorite green? 3 pips below. And then we move it up as price is making swings. So we make this swing, 3 pips below. We make this swing, 3 pips below. Then we make this swing, 3 pips below. And up here we can absolutely take profit because we already reached the daily range of this pair. 100 pips on a single move during the Asian session. This is absolutely enough for us to take profit. So as you can see, Trade Assembly is all about putting the picture together and making the market tell you a story, and that story has to make sense. And if everything falls together, like you have your overall structure, you have these trendline breaks, you have these continuation patterns, our indicators point in the right direction, everything comes together, then you get a high probability trade. And those will work out more often than not. Sometimes you have to wait. As I said, I watch 10 pairs and I find 1, 2, 3 of these per day, sometimes 0 for a whole day. I sit here watching 8 hours, I find nothing. But still I get in around 40 trades per month, and this is all I need. Okay, if you have any questions, as always, go to the forum, waiting there for you.